Yeah, hi. Thanks for the opportunity. First question on Mercedes volumes. If I look at this particular quarter, Mercedes volumes were flat, all India basis, YOY terms. But if I look at our numbers, I'm getting a sense that probably we have, clocked more volumes or gained market share or something like that. Can you please throw some light on it?
Yeah, Sabyasachi, what has happened and as what Aryaman said, that the ASP, the whole world somehow is tracking the number of cars sold. Now, what the newspapers are not tracking is the increase in the ASP. So what we actually did was that though we sold a little, the number of cars that we sold is higher than the last quarter, but the ASP has increased more.
Yeah. So just a follow-up here. If I just derive the Mercedes sales from the pro forma and reported numbers, I believe the sales value has gone up by 35%. In the opening remarks, Ariman mentioned that the ASP has gone up by 23%, I think, YOY to 66 lakhs.
The point with Sabyasachi, the thing is, as compared to the previous year, same quarter, yes, there is an increase in the volume as well as the ASP. What Sanjay Bhai is mentioning is the compared to the previous quarter, the Q4. Against the Q4, there is a lower number in the Q1 of Mercedes-Benz, but as against the last year same quarter, the quantity also increased.
In our case, but what he's asking is that Mercedes India did not grow.
So my question is Mercedes India YOY Q1 FY24 versus Q1 FY25, volume numbers were same.
We have grown a little.
We have grown
a little, which would include some kind of maybe demo cars also, which we may have sold. Yeah. But I'll need to check the numbers and come back to you on this. Sabyasachi, it's a fair question.
Got it. Second thing on the M&M Mahindra outlet that are lined up launches in Q3. Hyderabad, three outlets and 3 workshops. My question is, Mahindra is coming up with this big, launch tomorrow, 15th August. Why are we not gunning for launch of this outlet in this quarter itself, preponing the launch from Q3?
My compliments, Sabyasachi, for tracking this closely. I'm happy that you are doing a great job. Now, we are exactly doing the same. Though there is going to be a launch, the cars at the dealership are going to be available in the first week of September. This is what we are closely in touch with the company, and we are hoping to get this operationalized in the beginning of September, at least one outlet where we can get this done. The thing about Hyderabad was that we have been getting into some brown or greenfield projects that we have been taking. So, if you see, our plan was to actually launch it in the third quarter. If you see our presentation on page 10 earlier, it was that. So, understanding that this was something which we would have otherwise missed, we have preponed a lot of stuff. A lot of people are putting day-night work over there, and I'm hoping that at least one outlet of ours will get operational in the next three weeks or so to capitalize on this.
Great to hear that. And all these 3 outlets would be new outlets, right? We are not acquiring some existing ones.
No, sir. These are new ones.
Got it. On Honda, we understand that there is some brand fatigue, or there has been no major blockbuster launches for this brand for a long time, right? Why are we adding Honda outlets? Can you just help me understand?
Yeah, surely. So, there are 2 answers to this. One, Honda will have a big launch of Amaze in the next 3 months, 4 months or so, which actually sells a decent number of vehicles in Gujarat, Rajasthan, Madhya Pradesh area. So that launch is happening. The thing in Jaipur where we entered is that initially there were 3 dealers of Honda in Jaipur. One shut down, the second one we have acquired, and the third may or may not be there in some time. So in this business in which I have been saying, it is it's not only the numerator but also the denominator of how many dealers are there. Honda has been extremely profitable for us for the last 25 years because of the service revenue, the car park that is there. And if you get a larger geography, it becomes a good kind of a business to be. Also, to answer your question, there is an entry that we need to do in a certain geography where we want to overall focus. I answered initially to Lokesh as to why we went into Calcutta or Hyderabad as against others. The same answer is in Jaipur. Jaipur is a fast-growing geography. Now we need to enter there for other OEs who we want to partner with going ahead, maybe next year, some other time. They will want some geographical presence. So when we entered like the Hyderabad market, we had to first go with Mercedes-Benz, who gave us the after-sales business, and after that Mahindra and Mahindra as well as Kia were comfortable signing up with us. So it is like an entry to a large market with a very kind of a predictable thing that we are going in for Hyderabad, for Jaipur.
Then a follow-up to this is, can we expect more brands outlets coming up in Jaipur for us, Landmark?
That is the macro thing, whether it is Indore, whether it is Hyderabad, whether it is Calcutta, Mumbai. This has been the company's strategy. Now, whenever a new brand opportunity happens, we would prefer to be in the geographies that we already are and go into geographies which are growing, but we are not present.
Got it, sir. One last question from my side. On this, presentation, slide number 10, where, we have shared the expansion plan status. Anything else are we planning for this entire financial year, barring whatever is there in the presentation till Q3 FY25?
No, sir. This is what we have.
Okay. Thanks. That's all from my side, and all the best.
Thank you.
Thank you very much. Next question will be from the line of Raj Shah from Ambit Asset Management. Please go ahead.
Hi, sir. Thank you for the opportunity. I wanted to understand the gross margin decline during this quarter. So how much of it was due to the addition of newer OEMs, whether Mahindra or MG are at slightly lower gross margins for us, and how much of it was because of higher discounts during the quarter?
So yes, there are both elements affected in this quarter. As we explained earlier, is new outlet after sale business is not with their potential, so their margin is lower. Therefore, the blended margin of the company is lower after sale. Then the second was we have not done the wholesale to tighter control on the inventory. So again, point.
Maybe I can answer that. What has happened is that in the existing brands also, Raj, and I spoke about it a little bit in my speech, but let me explain more in detail. The point is that the industry works on a discount or an incentive on a certain amount of wholesale that we do from the factories. What we have done, we did consciously in some parts of May and definitely in June, was to forego those incentives because we wanted to reduce our inventory. Now we actually were able to do that quite successfully, and this, if you ask me, one of the better things that has come out of the last quarter is that when the whole industry is devoured by the inventory that is aging and all that, we are pretty lean as compared to most of the other guys. So, but that has come at an expense of some margins. It's not only the margins that we gave in the market to sell the stock, it was more that we did not wholesale from the OEs and get that extra margin.
Okay, understood. Like, what would be the average inventory that you would be comfortable with going forward? And just so what is the percent increase in discounts if I just want to compare on a Y-on-Y basis?
So Raj, the inventory of new cars at the beginning we were at around 41 days, and which is still outside of our comfort zone. So we are happier with around 30-35 days of inventory. When let the world be at 60 days, 65 days, we don't want to carry that much inventory. So we will still try to reduce it by 5-7 days if we are able to do it. But now we have done most of the dirty work has happened over here. This is something that we will want to kind of do with. And because we are in many of the markets, not all, I mean, not everywhere, but many of the markets, we are the only retailer of that OE. And the OEs are giving so much discounts right now. The good part is that the OE purse strings have opened up, and that is why the demand is also back. So the need for the dealer to put more from their pocket is really reduced.
Okay, understood. So just last question from my side. On the Mercedes front, how is the supply chain right now? Like, we are facing some supply issues. And second is, when do we expect the E-Class Mercedes to be launched? Whether you have any communication from the brand side, what kind of growth are you targeting for this financial year?
So Santosh Iyer has guided for a double-digit growth for the year. That was the last interview of his that I saw. The E-Class is getting launched in the last quarter of this calendar year. So we will see some numbers kicking in for us in the next quarter for E-Class. Obviously, it is something that eagerly people are awaiting, and we are seeing a great amount of interest. Sorry, what was the other question over there?
What is the
So,
supply chain issue currently?
So, I mean, I wish every car that the customer wanted was available. We had some issues with the diesel and all that. Now that keeps on happening in this industry, but it's okay. I mean, we still are short of some or the other car, but nothing very major.
Okay, thanks a lot.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. I repeat, please limit your questions to 2 per participant. The next question will be from the line of Amarkant Gaur from Axis Capital. Please go ahead.
Yeah, thank you for taking my question, and thank you, Sanjay, for such an elaborate presentation. That's really helpful. I had 2 questions, one flowing into the other. One was, basically, if I'm looking at the numbers, that breakup that you have provided of existing versus new, your PBT is about 12 crores, right? And if I look at the PBT of Mercedes standalone that you have provided, plus if I add some bit from Landmark Cars East, probably the overall PBT from existing non-Mercedes brands would be maybe 1 or 2 crores. So that's if you can shed some light on that number, which are the brands probably that are doing relatively better, and where is the most of the drag coming from?
Yeah, Amar, this is a good catch, and but the good part, the answer to this is that apart from Mercedes-Benz, we have now BYD, which is decently profitable for us once the seal deliveries have started, and the Atto 3 will only happen from September onwards. So over the next 1.5 years, we are pretty bullish on BYD once the supplies are. We have cars on the road and the workshops then start kicking in. We are making decent amount of money in Ashok Leyland. Honda has been a little subdued, but it has always been a little profitable. So actually, from the bouquet that we have, people are more or less contributing the way they were supposed to. Some of them will have a better second half. Honda, for example, with the Amaze and all getting launched. And we have reduced the inventories in some other, we have cut in Renault. So some of the loss-making things are getting behind us. So actually, if you ask me, it's not only a Mercedes-dependent company that we have, fortunately.
Understood. So that leads to my second question. So now that we are in the process of opening a lot of stores, right? And also there are certain brands which are little behind in terms of profitability, and they also need to catch up. So from that perspective, breaking down into these two bits, how do you expect in terms of not in absolute numbers or any guidance on the numbers, but in terms of absolute tracking of performances over the next maybe 2, 3, 4 quarters or beyond that? How should we look at the overall performance trending from the current levels? Like maybe earlier some of the participants you also talked about maybe from Q3 it should start to improve. So if you can break it down a little bit more for us to understand that.
So Amar, the reason why I had said Q3 was that from Q3 we will have the Windsor which will be available for MG. We will have the Atto 3 which will also be being delivered. We will also have the Mahindra vehicles that will start kicking in. We have the E-Class, the big one, that will also happen. So that was my reason for saying that from Q3 onwards things will happen. After sales right now we are not so much concerned about. It is the sales that we need to push. We see our business that sales has to also be responsible for generating profit. That's the way we look at it. It comes with insurance and finance and other incomes. And the moment the sales numbers happen, everything starts looking hunky-dory. The first quarter wasn't the best for sales for any brand. We believe that it will now pick up. So the way to look at it, Amar, would be to kind of estimate the number of cars that will happen over there, and we can do that math there.
Understood. So where I was coming from was mostly from the brands that you are adding, and there is a operational challenge. Obviously, it takes time. You indicated maybe a couple of quarters, 3 or 4 quarters it takes for the brand to stabilize and then start performing. And from the new brands, the volumes, additional volumes are going to come, and these are the brands that are doing better as well, right? My question was more from the perspective of existing brands now that other brands, excluding Mercedes and even if I exclude BYD as well, then profits are relatively lower. So how do they move in line with our overall company performance?
So Amar, they look good. Existing brands are BYD, which looks good. BYD is not a new. BYD is in existing. Jeep is in existing. So Jeep, for example, we are seeing a good amount of traction. What has happened is, and this is not only for Jeep, wherever, the customers have been there. It is just that they are now seeking deals. The good part about the industry that we have seen in the last few months was that the inquiries were pretty much there. The people were not closing. Now that the discounts are there, they believe that the festive season is upon us, the government formed, and everything is now business to normal. So, and the OEs have opened the purse strings. So this has happened in Jeep also. Some 3 days back, the Compass price was corrected. And we believe the same thing will happen in other models very soon. This is one kind of an experiment. So Jeep volume will pick up. Now this is where the 2-3 big moves I see coming up. Honda and Volkswagen will be stable for next quarter. Amaze will be a big driver for us going ahead because we sell a lot of Amaze in Gujarat.
Okay. Thank you, Sanjay bhai. I'll fall back in the queue. Thank you so much.
Thank you. The next question is from the line of Shashank Kanodia from ICICI Securities. Please go ahead.
Yeah, good morning, sir, and thanks for the opportunity. So I just wanted to check on Mercedes-Benz. So last year, Mercedes-Benz kind of underperformed the luxury car market segment because of some supply side issues and lack of model launches, right? This year, they were supposed to go for some 10 model launches, but in the first half, they still underperformed the market. So do you see this as a structural issue to the brand as such, wherein, in luxury car market, other brands are kind of gaining more prominence?
No. I see what has happened is that the pecking order is now set. Within the luxury brand, Mercedes is clearly numero uno. This will be the 9th or the 10th year running where they will be the market leader. Now, people who are coming from a low base, their percentage growth is better, and that's why we believe with a few percentage points that the company has been underperforming. What you are saying is right. But also look at the ASP. Now, the sheer numbers, what you are saying is right, but the ASP increase has been much higher than any other brand, is my sense. 25% of what we sell is all top-end vehicles. So this is, we believe that like the E-Class comes, every brand has some kind of a tailwind when new models are launched, and our tailwind will come when the E-Class is getting launched, in number terms.
Right. So like, for example, JLR is going for domestic manufacturing, right? So even these guys are looking at good numbers. So do you see, obviously we can maintain the number uno position, but the volume growth effectively being less than the competition and it impacting us as well? As in, this is something that you fear or something of that sort?
Yeah, the JLR number, the CKD happening is obviously they are taking away some volume from the luxury industry per se. The nascent industry size of 45,000 has to significantly grow. We are all kind of taking the pie out of that 45 and maybe this year 50,000 or whatever. This number, which is 2% of China and significantly lower than any like a Korea or a Japan, has to grow multifold. We are at around 1.1% luxury penetration. Now you see pockets of India which are actually growing. Let me kind of answer it this way. In a place like, say, Madhya Pradesh, we have seen our sales kind of double this year. So this is a starting point, and I won't really lose much sleep over market share gain or a loss for a quarter or a half year. It's a correct question to have, but we have a kind of a decade of journey ahead of us.
Thank you. Second, say on the new vehicle car sales, your margins were good 2.5% in the past and dropped to 1.7% last year. We further dropped to 1.4%. So we do understand that, because of new outlets that you're opening, it's on a declining path. But what is the sustainable rate going forward? Like you mentioned, 18% for after sales. So like 2.5% is a kind of a sustainable range for this. And when do we start attaining that?
We would see. This is also in the last question to Raj. I believe I answered that we've let go of some of our wholesale incentives. If whatever the normalization is happening, we are hoping that from October onwards, life will be okay. The demand and supply will be at an equilibrium, and things will be back to business as usual.
So what is the sustainable margin rate that you're looking at that division?
On what the new car sale?
New car sale.
So it has to be upwards of 2%. That's what we are talking about.
Okay, and we are confident 2-3 onwards, you should start attaining that.
We are hoping that that's what will happen. I mean, I only hope that the economy sustains and we don't get any shocks here.
Right. And so as a management and promoters, just want to get a sense. So we spend more time, meeting investors and doing for roadshows, or we spend more time getting our house in order and getting the P&L right?
Yeah, that's a good question because I spend maybe 4 or 5 days of a month in trying to meet the investors, but that's not that much time that really gets there. It's actually what is happening is that I have been working around 7 days a week. So there is no holiday generally, and there is no sleep that gets more accumulated.
I hope you're getting the point I'm trying to drive, sir. We would want to wait a better P&L performance from Landmark. It's been quite some time that we've been disappointing on the P&L front.
Sure.
Thank you so much.
Thank you very much. The last question for today will be from the line of Chirag from Ratnatraya Capital. Please go ahead.
Hi, good morning. Thank you for the opportunity. Just a clarification question. So the slide 26, which talks about our ambition of getting to 4% on both personal expenses and other expenses. Is that the exit number that you want to get to? I mean, the slide reads as...
Yes. Because that's where the turnover will also kick in, and the measures will also...
For Q4, that's what you mean?
That's what we are seeing, yeah.
Understood. And for this quarter, is it possible to share the gross margin for the services business? If you can just bookkeeping question, so that's 90%.
Can you repeat this question, your gross margin?
For the services business. Just the services business, the after-sales.
Profit of margin, EBITDA margin and margin.
I can take it offline otherwise. Gross margin is there.
Yeah. Surendra,
We'll give you the separate.
Yeah, we have last 5 minutes, so if there is any other question, yeah.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Yeah, I think most of the questions were answered, which included the closing comment that I wanted to basically give. Really, there is nothing more that I need to add. I have full confidence in the team that I am leading, and we are working harder than most people I know to get what we want to give, because we are all stakeholders. I mean, not only our countries, our business is interwoven with the country. My and our employees' future is interlocked with the future of the company. And just so that people on the call, if they are interested, know that all the senior management, the director level guys, and including me, did not take any PLB or increment for the last year. So the pain of any other investor is shared by everybody. Now this needs to be understood and respected when we are doing this. And sometimes the situation which is beyond your control also needs to be appreciated. I think again, as I'm saying, I personally believe that I'm feeling happy with the way we have steered the company so far. And this business is not to be looked at on a quarter-to-quarter basis. I'm answering these questions, and I'm learning every time something new and taking it home. But this is over a period of time that this business needs to be looked at. And once we look at it a few years from now, we will look at this as a passing memory of the calls that we are having today. Thank you.
Thank you. On behalf of Monarch Networth Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.